Welcome to the Daily Business and Finance Show. In today's episode, we delve into the Trump administration's proposal to close a loophole for food ingredients, explore Apple's ambitious plans for a glass-centric iPhone by 2027, and discuss Rocket Lab's potential delay of its Neutron launch to the same year. We'll also cover Shine's anticipated Hong Kong IPO slated for August 19th and Hallador's under $800 million Turtle Creek gas project targeting commercial operations in the second half of 2028. Additionally, we'll examine Uniper CEO's insights on how Mideast peace is crucial as Germany pursues its gas goals. In market news, Plug Power shares soar by 8% following a strong Q2 performance and raised outlook, while On Holding reports impressive earnings with an updated full-year forecast through 2026. Stay tuned after this short ad break to learn more about these stories. The Trump administration plans to increase oversight on ingredients by requiring companies to inform the Food and Drug Administration when labeling ingredients as generally recognized as safe. Additionally, the Health and Human Services Department has suggested defining ultra-processed foods. Industry groups have mixed reactions, expressing concerns about scientific validity and potential political motivations behind these changes.
Apple plans to release new iPhone Pro models next year, marking its 20th anniversary with a focus on glass-centric design. These phones will have glass on both the front and back, curving into the sides with a metal band. An all-glass version was considered but ultimately scrapped due to production challenges.
Rocket Lab shares fell more than 9% in pre-market trading following news of a possible delay for the Neutron rocket's inaugural flight to 2027. However, the company posted a record second quarter, with revenue increasing 62% year-over-year to $234.6 million and a backlog totaling $2.36 billion.
Online fast fashion retailer Shine is planning to launch its initial public offering in Hong Kong as early as August 19th, aiming for a valuation between $30 billion and $40 billion. This marks a significant decrease from its peak private valuation of $98.2 billion in 2022. The company is facing challenges such as slowing revenue growth, higher trade costs, regulatory scrutiny, and intense competition. Recently, Shine reported a quarterly loss of $99 million.
In the second quarter of 2026, Hallador Energy focused on becoming a multi-fuel power producer. CEO Brent Bilsland announced the Turtle Creek gas project, a 460-megawatt plant costing under $800 million, expected to begin operations in late 2028. Despite operational challenges, contracted revenue rose to $2.4 billion.
Germany plans to increase its gas storage to 70% by November 1st. Currently, levels are at 48%, which is below Europe's average of 59%. Uniper CEO Michael Lewis emphasizes that market prices need to encourage storage. Tensions in the Middle East are driving up gas costs, affecting stockpiling efforts. Europe also depends on imports of liquefied natural gas.
Plug Power shares rose 8% in pre-market trading after announcing second quarter results that beat expectations. The company also increased its 2026 revenue growth outlook to between 15% and 16%. Revenue reached $178.29 million, exceeding estimates by $9.17 million. Plug Power aims for positive earnings before interest, taxes, depreciation, and amortization by late 2026.
On Holding reported a second quarter non-GAAP earnings per share of 0.35 Swiss francs and revenue of 850.3 million Swiss francs, up 13.5% year-over-year. Adjusted earnings before interest, taxes, depreciation, and amortization rose by 23.5% to 168.1 million Swiss francs with a margin increase to 19.8%. Cash reserves grew by 18% to over 1 billion Swiss francs, while net working capital increased by 11.5%. For full year 2026, On Holding anticipates net sales growth in the low 20% range and expects its direct-to-consumer channel to outperform wholesale significantly in the latter half of the year with projected sales between 3.47 billion Swiss francs and 3.56 billion Swiss francs at current rates. Gross profit margins are expected at least at 65%. Reflecting their premium model strategy, adjusted EBITDA margin is forecasted between 19.5% and 20%.
Thank you for tuning into the Daily Business and Finance Show. Join us tomorrow for more insights to keep you ahead in the business world. Until then, I'm Montgomery Jones.
And I'm Amalia Dupre. It's time for us to say goodbye until we see each other again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.